Okay, let's get it. TP1 and 2 hit. As you guys can see, listen up because we're going crazy and the trade setup are appearing because I'm going to teach you how to make money in these markets and do it in a more consistent way, in a less risky way, and most importantly, a more profitable way. So fundamentally, you understand that trading has nothing to do with the amount of time you trade. In fact, it has a lot to do with how much you make when you do trade. Some people can trade a lot and can make a lot at the same time in terms of risk to reward. But most people can barely make some money and they still trade a lot. So, what should you be doing? Listen, look for your good setups, meaning A plus setups, setups that are likely to pan out, and then only take those. And if you feel like it, and when you get confident enough, risk a little bit more than you would per trade if you were trading many like you are today. So instead of risking 1%, risk 2%, maybe 3. But that's about it. So what do? You guys can see the channel. I used to post trade recaps just about every day. Nowadays, I maybe get one trade a week, sometimes none, two a week pushing it. Sometimes it's a good week and I catch quite a few. But in general, we're talking about two to maybe one trade a week. So let's talk about this week's trade. We actually caught two this week, so that's a really good week for me. And that's really all you need. So how do you make a good trade? One, you make sure that the time frames align. So how do you do that? You check the daily time frame and you observe what is going on, right? And how do we do that? Look at structure. As you can clearly see, price is going down. Price is going down. Not that hard to point out, right? Where's the nearest high time frame liquidity? All the way down here. So what does that mean? We have room to go even lower. Okay? It's not too hard. Then you scale down again. You use the same bias that you just formed on the 4 hour. Oh, that was weird. But use the same bias that you formed on the 4 hour, on the daily, and apply it to the 4 hour. So are we going to take this trade? What are we thinking? Okay, where are we within this retracement? Right? This was the last expansionary move down. So where are we? We are right around the 618, and that's right around market open. Oh, what a coincidence, right? So we're saying, okay, the 4 hour is bearish. Now we've made a 4 hour retrace. We're expecting a 4 hour expandment. So what do we do again? So while we're taking this trade, what are we thinking? Okay, we understand that the hourly structure was bullish, but during what? London session, we see a break of structure down. Beautiful. What does that tell us now? 4 hours good to go. Hourly is good to go. Daily is good to go. I don't know how many videos I have, but you guys can go back and see what I always do. Daily, 4 hour, 1 hour. Are these in alignment? Can my overall direction be right? Well, these allow for it. If I'm saying bearish, can all of these allow for a bearish move at this given point in time? So here comes New York Open at 8 a.m. Very, very simple. We see a retrace into it. So what are we thinking? If we can get confirmation on the lower time frames at this point, because the daily, the 4 hour, and the 1 hour say that price can go down, we just need confirmation on the low time frames to enter. Seeing liquidity get taken, a break of structure in the opposite direction, stuff like that, right? Now we scale down. So what do we see here? So we see price do what exactly here? 15-minute is also bearish, even easier, because when all of these things are bearish and price is on the higher slash discount end of why am I losing my words? Pause. When price is above the 50% mark of the last given move here, and we see that price is still bearish, that just means we need to wait for the sweep of liquidity to happen and for structure to shift on a lower time frame because we are very close to finishing whatever retrace price wanted to make. So how do we do that? We know that the 15 minutes bearish, right? So all we have to do is make sure that the 15 minutes stays bearish, right? So here, what do we see? We see that the 15-minute flips bullish within the first few minutes of market open, right? Whittled by 845. So now what are we doing? We're saying, okay, initially we're just looking for a simple structure confluence to make the trade. That's why this is here. And then we see a 15-minute break. So I'm like, okay, now we need to scale down a little bit and get an invalidation of this 15-minute time frame. And right there, you see this 5-minute break of structure, right? And that break of structure comes back, retraces, and we enter. That's simple. It's not complicated. So where did I enter? I entered on the first retrace within these candles. So I'll scale down for you guys to see. Let's just zoom in a little bit more because this is not visible. So what do you see here? We see price, break structure, come back in, make a break of structure. Where does that finally happen? Happens right here. You see price retrace, you enter. How did I enter this trade? This was the 5-minute break of structure right here. That happened, okay? So when this closed, I see this candle up back into the fair value gap. At which point on our way down, I pretty much enter. This was mildly early, but the theory is pretty much the same. So with that being said, we took a very, very nice trade, tight stop loss, high risk to reward, higher time frame trade with lower time frame execution. And yeah, I mean, I expect this thing to run. And we've already secured from 2 take profits. So we are already up fat on this trade. I mean, like first take profit, we secured 4R. Like I said, I kind of risked like 2R per trade. But essentially, we literally secured at like a good 4R. So 1 to 7 got hit. That means we secured literally 4R. That means, okay, now I'm making literally 8%. Okay. And then take profit 2 got hit. And I was like, oh, bet. And I closed this before I went to bed. That was even better because we closed another 3R, which is like 6%. So I mean, I'm already up 14% on my account. And what did I do? I took 1 trade. Normally the trades make 3 or 4R. However, what I can say is this: whenever you find the good trades, let them perform. Don't be afraid. Let it do its thing. And I'm not saying pull these for a while. I'm just saying look at the obvious take profit point and take profit there. Because either ways, what's the point of having a winning trade if you can't make money with it? You know what I mean? So I'll see you guys in the next one. Hopefully this reaches final take profit and I pretty much make enough profit for more than, I guess, a month and a half of my average, if that makes sense. My average return. But yeah, I'll see you guys in the next one. Join the Discord because I literally talk about these trades before I take them there. And yeah, I'll see you guys in the next one. Quality over quantity, especially when the quality makes you a shit ton more money than the quantity ever would. See you guys in the next one. And sorry if my computer's laggy.